All right, everybody, welcome back. Ready for a deep dive? Today, we're tackling something a little different than our usual fare.
Oh, yeah.
We're looking at indexed universal life insurance,
IULs.
IULs. Yeah, and honestly,
Right.
I was a bit hesitant at first.
Yeah.
You know, it's not exactly the most exciting topic, right? But we're going through some marketing material we got from diversified insurance brokers.
Okay.
And I got to say, the more I dug into it, the more interesting it got.
Yeah, no, I get that. I mean, at first glance, it's not exactly like grabbing you by the collar.
Right.
But when you start to think about it, it's like everyone wants that life insurance protection, right?
Of course.
But also wants to see their money grow.
Sure.
And this kind of promises both. So that's what we're going to unpack today.
Right.
What you're really saying about how IULs can do that.
Yeah, so let's get right into it.
Yeah.
What are these IULs? Are they really that different from just regular life insurance?
Oh, absolutely. The biggest difference with traditional life insurance, you pay your premiums, your beneficiaries get a death benefit. That's it.
Yeah.
Pretty simple. Right.
Straightforward.
IULs, they add another layer on top of that. And that's the potential to build cash value that's linked to market indexes.
Okay, so like the S&P 500, that kind of thing.
Exactly. Yeah.
So it's like investing in the stock market, but through your life insurance. That sounds a little risky.
Well, it's not a direct investment. That's where the whole index part comes in. So your cash value, it doesn't go up and down every day with the market.
Okay,
Instead, it's credited with a portion of the index's gains.
so how's that work?
Well, it's usually based on something called a participation rate. Let's say just as a, for instance, at the S&P 500 goes up 10%, your policy has an 80% participation rate. Your cash value would then increase by 8%, not the full 10.
Oh, so you're not fully exposed to the ups and downs.
Exactly.
But what happens if the market takes a dive? Do you lose money on that cash value side?
That's where the floor comes in. Most IULs have a floor, often 0%, and that protects your cash value from losses if the market goes down.
So you get the potential upside, but you're protected on the downside.
Yeah, you got.
That makes sense. I'm starting to see the appeal here.
Yeah.
But, Diversified also keeps talking about how flexible these IULs are. So what does that mean in real life?
Well, think about it. Life throws curveballs, right? You might get a big promotion, want a bigger death benefit, or maybe things get tight. You need to lower your premiums for a bit.
Yeah, definitely.
IULs, they let you make those changes without having to get a whole new policy. That kind of flexibility can be a lifesaver.
Yeah, I've always thought about life insurance and investments as completely separate things, But this is making me rethink that.
It is a different way of thinking about it. And on top of that, there's the tax advantage growth of that cash value.
Yeah.
Just like some retirement accounts, you don't pay taxes on those gains until you take the money out.
So the money can potentially grow faster.
Exactly.
Hold on. I think Diversified mentioned something about accessing that cash value tax-free. How does that work?
Right, that's one of the big things they highlight.
Yeah.
If it's structured right, you can usually access that cash value through policy loans. And that's usually without triggering a taxable event.
Oh, wow.
So for someone in a high tax bracket, that can be a big win compared to your traditional investment accounts.
I got to say, it's all starting to sound pretty good. It makes sense why people are getting interested in these IULs.
Yeah.
But of course, Diversified is presenting this in the best light possible. What are some downsides they might not be mentioning?
Okay, that's a great point. Like any financial product, there's always more to the story. Fees, for one thing. IULs, they often come with higher fees than other life insurance or investment options.
So even if the market's doing well, those fees could still eat into your returns.
Exactly. And if you need to tap into that cash value early, like before retirement, you could be hit with surrender charges.
How much are we talking?
It can be a lot.
Ooh.
And another thing to keep in mind, those loans, while generally tax-free, if you end up surrendering the policy early, any gains you withdraw could be taxed.
Ah. So it's not as simple as just buy an IUL and all your money grows tax-free.
It's more complicated than that for sure. You got to think about your own situation, your risk tolerance, what your financial goals are, all that good stuff.
Right. So it seems like IULs offer this interesting mix of life insurance, potential market-linked growth, and some pretty nice tax advantages.
Yeah.
But there are definitely some complexities and potential downsides that Diversified kind of glosses over.
Definitely. It's like any big financial decision, right? You can't just jump in. You got to do your research.
Absolutely.
Yeah.
So for someone listening who's intrigued by IULs, what's the next step?
First, figure out what you really want. Are you mainly looking for life insurance or tax advantage growth, or are you looking for both?
Right.
Then start digging into specific IUL policies, compare the fees, really understand the fine print, and most importantly, talk to a qualified financial advisor.
Yeah, get some expert advice tailored to your situation. Great advice. I think we've covered a lot of ground today. But here's something for everyone to think about. Given everything we've talked about, what are the biggest factors you would consider when deciding if an IUL is right for you? Think about your own financial goals, your risk tolerance, all of that.
That's a great question. And there's no one-size-fits-all answer. Keep learning, keep asking questions, and make informed decisions. You got this.
Couldn't have said it better myself. All right, everyone, thanks for joining us for another deep dive. We'll see you next time.
See ya!